So in this video, I want you to understand more about structure. You understand? Because when you sent me a picture of that trend line liquidity that you were marking, I saw that you were marking out from daily time frame and then you moved to 1 minute time frame. So I want you to understand time frames. You understand? The daily is another time frame. Let me start from the daily. Daily is another time frame. There are time frames are up to monthly, weekly, yearly. You understand? Now, what that means is that for one single candle, this one single candle to close, you understand? For this one single candle to close, it will take a day. You understand? If it's a daily time frame, it will take 1 day for this candle to close. If it's a 4-hour time frame, it will take 4 hours for one single candle to close. You understand? So on and so forth. If it is 1 minute, then it take 1 minute for one candle to close. That's why you see the movement. It's fast, on the 1 minute time frame. So here now, I just want to talk about internal structure. Now, internal structure now is the structures that you have inside of an higher time frame structure. Let me see a daily time frame now. You have a higher high, a higher low, higher high, higher low, higher high, higher low, and higher high on the daily time frame, right? The structure is clearly bullish, right? It's obviously bullish. You can see we kept breaking structure. We have a break of structure here. We have a break of structure here. We have a break of structure here. I understand. So yeah, obviously the chart is bullish. So obviously the chart is bullish. Inside of these structures now, if you should now go to lower time frame, understand, then you see inside there are internal structures. Internal structures, higher high, higher low, lower low, higher low, lower low, higher low, lower low, higher low, lower low, higher low, lower low. And here when market now reverse, you will now see a market structure shift inside, and then price will now keep going high, higher high, higher low, higher high, higher low, and then broke structure, higher low, and inside here again the reversal too. When market is now coming back down, you see market structure shift again, and then keep going down, so on and so forth. So what I want you to understand is the internal structure. You understand? If you should go in a daily time frame, you'll see internal structures. You understand me? So that was how in some you will now see that they now create something like a trend line liquidity, and then when market is now coming to sweep the liquidity, it will not clear the entire liquidity because the structure is a bullish structure, so it's going to respect it and keep buying back. You understand? That's why it will only sweep maybe half of the liquidity and then reverse and break another structure again because it's a bullish market. So I'll give you an example here on BTC. So on BTC now we'll go to the daily time frame. Right, on the daily time frame now we can see here we have this structure. We have this structure here. We have the low, we created a high, and then we came down. And then we came down and break structure, and now we're having our reversal, right? Now we're having our reversal. So what happened here, you can see from here now is the low. This here is where we broke structure. You can see this body, we close with a body here. That's the break of structure. As it was just this week, 1, 2, this week, it's not a break of structure, it's just sweeping liquidity. But since we came here and closed with this body, then we have confirmed our break of structure. So now we'll go to the 1 hour time frame. You see I've skipped 4 hours, 3 hours, 2 hours, I've come to 1 hour. Now inside that 1 hour time frame now you see there's internal structures. You understand? There are internal structure inside of that 1 hour time frame. So you can see it. So when market started pulling back up here, creating this high, you can see this high here. You can see we have this high, we have this low. We created this high inside here as you are seeing it, then we created this low. As we came back and broke this here, we take out this high. That's where our market structure shift occurred. Price did not come back and break low, instead it respected it and then broke another structure. That's it. Market structure shift has occurred here. You understand? Then price kept going up. This one now here created liquidity inducement. Price came, mitigated the inducement, tap this PO high and continue going higher. Now even in this 1 hour time frame, we have this structure here on the 1 hour time frame. You see how it's coming down in a trend line manner, creating trend line liquidity. Price now broke the trend line liquidity with a market structure shift, and then start trending back up again. And inside of it, as you are seeing this trend line liquidity that's creating here, it's internal structure, because this is the eye. You understand? And all these are internal structure until this eye is broken. You understand? Until this eye has been broken, that's when we have a break of structure, and it's a single structure from here to here. Where we broke structure here, that's a single structure, right? Now, since we have a break of structure, this pullback that we have here is also another structure. Here, even here, you can see this one is very small, because if you go to lower time frame, you see it clearly. Another structure, another structure, another structure, and then the last eye was made. You understand? The last eye was made, and inside here we now had our market structure shift. Now, since this one has now created the eye of this structure by using this point of interest here as the blockade, you understand, as what will block price from going higher, then it created a market structure shift and start trading down again. And as it was trading down, it now start clearing this trend line liquidity. You understand? It started creating another higher low, lower low, higher low, lower low, higher low, lower low. You understand? Creating all that. And here, what it did here, you see this one here, this is an inducement. Here's an inducement. Here's an inducement liquidity, an inducement liquidity. Price then create another internal structure for this. This is the high, this is the low, this is the liquidity. Internal structure, internal structure, internal structure, mitigated the point of interest here, sold down, cleared this trend line liquidity again, and kept going down. So because the market is bearish, that was why we now target the low until we clear the entire liquidity. So after we cleared it, you see market was now ranging. You see, market was now ranging here, as I explained to you as I explained for you in the other video I sent yesterday, where market was now creating this range. What did they do? Swept this low, quickly reverse back immediately, give confirmation, and then start buying. You know, the explanation I gave yesterday was for the upside. It swept the high and then start selling. You see this one now swept the low and then start buying. So now like this, it's obvious, right? I don't need to tell you, know that if you are talking about the higher time frame structure, it's still bearish, because price needs to do what? Break here before we can confirm that the price has changed direction, right? So this is still a low that market can still come to. If it should reject from any point of interest around here again, then we can still sell until we take out this low and break another structure on the daily time frame. Because since we have already broken structure on the daily, you understand, what we'll be expecting now is this. Since we have this broken structure here, we'll just be expecting another move and then another sell. Simple market structure, right? So until all this has been invalidated, here, before we will now see another change in direction. Or if price should now come here and then instead of creating low, you refuse, you now fail, now start buying again, then we know that market has created a field swing. So there's possibility that this eye and then this eye will be targeted. You understand? So that's it for internal structure. It's simple, the same market structure that I taught you, but you need to understand that in a higher time frame structure, there's an internal structure which is in the lower time frame. You can see it in the lower time frame. So watch this video and understand it properly. You understand, you see that those internal structure are usually what forms those trend line liquidity. You understand, those internal structure are usually what form those trend line liquidity. Here you can see there's another trend line liquidity here, right? So when price was coming down, instead of breaking this low and keep falling, it did not. And we also have a breakout here. Price ranged, swept the high, sold down. See, no more complete sell, and then this range here, this other block here, held price now is reversing. You see, price now is reversing, so there's high probability price can sweep this entire liquidity. You feel me? But since price is still bearish, it can just reach maybe somewhere around here and reject. Possible. But this low here is the main low. This is the main structural low. So we want this low to be broken. Understand? If we come down below this low, if we should break the low below this low, my tongue is starting to twist. That's what happens if I speak for too long. I'll start to twist my tongue. If we should come below this low here, that's when we'll have a complete bearish confirmation. But since this low is still respected for now, you can see it's still respected for now, we'll only be expecting more buys to price take out that low. Even on this trade that I explained for you yesterday, You can see we have the trendline liquidity here. We have broken below the trendline liquidity. We've also created a market structure shift here. An inducement has been formed here. So now this one now only came for a retest, and then we'll continue selling down. Also on this trade that I told you about, that this range is liquidity. If price comes to that liquidity, it will reverse, and you can see that's exactly what it did. Price touched the liquidity and reversed immediately. You understand? So there's another liquidity here, so there's high probability it will also target it, and you can see it's also in a trend line, so there's another high probability it could sweep this entire liquidity. That's how it is. And this is gold. Here we have this high, we have market structure shift here, liquidity here, tap PO high, break another structure, created liquidity, so there's high probability price can sell from here or here. So this is a very discounted zone, so this is the best place to buy, but price can sell from here, the closest to liquidity, and this is the closest point of interest to liquidity, so price can use this and sell. High probability of that happening. This one is another trade. You see this one missed my entry. This is a point of interest. Liquidity is here. It swept the liquidity but did not trigger my trade. This one too did the same thing, swept liquidity but did not tap my PO high. And then we have all these other trades here. So let's just see what's going to happen at the end of the day. While we wait, you see this one now took me out for some reason, and it's already starting to buy. I think this is where it came for. This is exactly where it came for. I was not aware of this 30-minute time frame. I should have looked at it from here. This is where it came for. Anyways, that should be it for this video.